Hi, I'm Ross Mayfield, investment strategy analyst at Baird, and we are back for another weekly update with our friends at Strategas. Today, I'm thrilled to be joined by Jeannette Lowe. Jeannette is a Washington research analyst and managing director at Strategas, and we are going to talk all things debt ceiling. Jeannette, how are you doing today?
I'm great, Ross. How are you?
I'm doing really well. Thank you so much for asking, and really timely to have you on because there's been a lot of developments on this topic this week. We're recording on Thursday morning, kind of after House Speaker McCarthy, unveiled the bill that they'll be proposing. And I was wondering if, just to start at a high level, you could break down what's in that bill and what are some key things that you all have picked out.
Absolutely. So, you and I have been talking about the debt ceiling for a couple of months now, and this is just starting to see a lot more movement and a lot more investor attention just because we are in the middle of tax season and because you now have the speaker actually moving legislation where before there was just talk about negotiations. So Speaker McCarthy introduced a bill yesterday that the House is going to take up for a vote next week. House Republicans are driving this bill, so they need to pass the bill out of the House with 218 votes. That means they can only lose 4 votes. And this bill includes a number of spending cuts and then some other changes as well. So one of the big things is that it would set fiscal year 24 spending levels back to fiscal 22 spending levels. And then it would cap non-defense discretionary spending at 1% annual increases for the next 9 years. So significant spending cuts on the non-defense discretionary side. And then that would also be included with things like repealing the green energy tax credits that were included in the Inflation Reduction Act that was passed last year. It would include rescinding Biden's student loan forgiveness program. It would include adding work requirements for SNAP or food stamp benefits. And it would also include the Republicans' energy proposal that they passed a few weeks ago, which includes things like permitting reform and trying to push for more production of fossil fuels within the United States, and then also fossil fuel energy exports as well.
Excellent. So a lot of things included and a big, obvious spending cut, as you mentioned. And I think, it's timely also because what's happening right now is the kind of X date for when this stuff needs to happen is moving around based on tax receipts, as you mentioned. And there's some thought that they're having this vote now because they expect it to be pulled forward in time. What are you all seeing on the tax collection side of things, and how do you expect that to impact the ultimate date where this needs to get done by, where the Treasury might exhaust their extraordinary measures?
So our original expectation was that the debt ceiling deadline would hit about late July, maybe into early August. But what we said is that this tax revenue season would be important to see whether or not we might see that timeline pull forward into June, and that would be early June. So we've been watching tax revenues come in. They are a little softer than last year's, but that's to be expected. So we got the data yesterday, and so our forecast is saying that based on the levels of tax revenues that we would need to see to have the deadline still hit in late July, we're about 17 billion below that level. Now, the tax revenues are not showing up completely, giving a clear indication one direction or another, although we do see a bias to the downside. So it's a little hard to know if the deadline is actually going to pull forward or not yet. So what we are saying is that, and we still have like another week. So people who paid by electronic payments this week, you'll see that revenue come into the Treasury sooner. But if people paid by check, that may not show up until next week. And so we still have a couple more days to kind of play with this. So currently what we are putting is a 25% probability that the debt ceiling deadline could get moved up to June. And that means that that's important that the House is actually trying to move legislation now rather than waiting in case that deadline does move up and they don't want to get jammed up and doing these negotiations in Congress. But we still also have a couple other things to watch. So Treasury will release by the end of the month its issuance forecast, and then we'll also get the monthly budget data in early May, which will also give us an indication about what we're seeing within the U.S. deficit and if that pulls forward the timeline. We have seen higher costs this year because of, higher Social Security payments, but also higher interest costs. And so that's something else that we're going to be watching. But basically, it's that the data has a small margin of error. And if the Treasury can get to June 15th, then there'll be new estimated tax payments. And then that would actually keep the deadline probably more likely in July. So there's still a lot of moving parts. And that's something that we're kind of keeping an eye on very closely.
So that's obviously a lot of things to be included in the bill, big spending cuts proposed. Is that the bill that you think will be passed ultimately, or will there be some changes along the way?
It's a great question. This is the first step. So the House passage of the bill is important so that negotiations can start. The House needs to be able to demonstrate that it wants to put in forth some sort of spending cuts to be attached with the debt ceiling increase later this year. So that is the first step. This is a bill that is probably not going to pass in its current form through the Senate. Democrats control the Senate. They have been calling for a clean debt ceiling increase, which basically just means that you would just lift the debt ceiling and not include other policy provisions with it. That's not going to be something that the Republicans can support. So ultimately, we do need to get to a negotiation. Anything that has to pass the Senate is going to need 60 votes. That means that we're going to need some bipartisanship here. So what we're kind of looking at, and a lot can change over the next couple of months, but we do anticipate that there will probably be some spending cuts. There might be some energy provisions like permitting reform that gets included in the bill. There might be a couple of other provisions that get included as well. But what I would say is just that if this House bill passes next week, this will probably not be the ultimate form of what we see pass later this summer.
Yeah, this has been a really great walkthrough of everything as it stands today, but obviously still a lot of moving parts around timing, around whether the House can actually pass this bill and kind of force some negotiations. And so that's another reason we're thrilled to be able to talk to you every now and again to get the best update on this. So Jeannette, I want to thank you so much for your time, and hopefully we'll get to talk to you again soon.
Thank you so much, Ross. I appreciate it.